In this video I will explain the strategy that I will adopt in 2024. I will have a bigger exposure to ETFs, not only to reduce some risk about some individual stocks, but also to have more diversification. This doesn't mean that I will follow in these ETFs the general market as the S&P or the Nasdaq. I will also have some thematic investing, like in some geographies or some teams, like the clean energy sector. The second thing that I will do is to have less positions. Of course, that being invested in ETFs will reduce the positions, but despite that, I will try to have a more concentrated portfolio, because my experience tells me that having too much stocks, it's very difficult to always being aware of what's happening regarding those companies. Less companies, more ETFs, and more attention to all the positions. I see investing in bonds through ETFs as a good thing in 2024. During the last years, the bond prices have decreased a lot due to the increase in interest rates. I think they are a little bit mispriced regarding stocks, because in the recent years the environment for bonds was very negative. So in terms of risk-reward ratio, I think bonds could be a good investment in 2024. Also, in terms of diversification, I think the market conditions advise broader diversification. Mainly because what we see is that the market is pricing in a lot of reductions in terms of interest rates. So a very positive scenario. I think diversification to the different asset classes will reduce the risk. I will tend to invest more in Forex because it's not correlated with this narrative of a very positive scenario, and we could hedge the positions in the portfolio in terms of the Forex, and it's not correlated, not with the bond market or even the stock market. And lastly, also related with this, I think, as I told in the previous point, that the market is pricing a very positive scenario for 2024 in terms of the reduction of inflation and the reduction of interest rates. With a positive outlook on some variables that we don't know if that will happen, I think that the global position, and all the previous points were related to this, will be, of course, a long position in terms of bonds and equities, but a selection of assets that will try to reduce the risk. We will try to mitigate the risk, choosing a broader sense in terms of diversification.